Welcome back. Yesterday, June 1st, 2026, marked a massive escalation in the battle for control over the future of finance. We are witnessing an unprecedented collision between cryptocurrency and raw political power. Ahead of today's high-stakes primary elections in California, New Jersey, and South Dakota, the crypto industry's political machine went on an absolute spending spree. Led by dominant super PACs like Fairshake, millions of dollars flooded into key races to back pro-crypto candidates and aggressively attack skeptics. They are not just looking at November, they are actively reshaping the ballots right now, even pouring massive funding into upcoming special elections, such as the race to fill the seat of veteran Representative Steny Hoyer. What is driving this urgency? It is a chaotic regulatory tug-of-war. At the federal level, the industry is riding a wave of deregulation. President Trump's recent executive order on financial technology integration is finally forcing federal agencies to clear the path. Traditional payment networks are now actively integrating digital assets into daily commerce with fewer bureaucratic roadblocks. But while Washington loosens the reins, state governments are scrambling for revenue. Look at Illinois. They just passed a massive $56 billion state budget. To fund it, lawmakers did something that has sent shockwaves through the community. They slapped brand new, aggressive taxes directly onto digital assets and cryptocurrency fantasy sports markets. It is a stark reminder that even if you win in DC, local governments can still target your portfolio. This isn't just an isolated American struggle. The global regulatory net is tightening fast, and the era of hiding assets across international borders is drawing to a close. Yesterday in Asia, Hong Kong lawmakers officially advanced the Inland Revenue Amendment Bill of 2026 through its crucial first and second readings. This moves Hong Kong into the final stages of implementing a strict, comprehensive crypto asset reporting framework. This framework enforces total transparency, meaning global tax authorities will soon automatically share transaction data. For international investors, the message is clear. Regulatory compliance is no longer optional, it is mandatory. But the most explosive catalyst from yesterday came from the macroeconomic landscape. Former Federal Reserve Chair Jerome Powell issued a historic, stark warning regarding the erosion of central bank independence. Investors immediately translated the threat of political interference at the Fed into massive long-term inflation risks. This anxiety, combined with severe oil price volatility stemming from the ongoing conflict in Iran, triggered a swift, powerful macro shift. Capital is aggressively migrating out of traditional risk assets and flowing directly into Bitcoin, reinforcing its narrative as a hard, politically independent store of value. As crypto cements itself as a dominant geopolitical and electoral weapon, the rules of the game are being rewritten. Is Washington embracing the future, or are states going to tax it out of reach? Let me know your thoughts in the comments below. Don't forget to like and subscribe for daily macro breakdowns. Disclaimer: the information provided in this video is for educational and informational purposes only. It does not constitute financial, legal, or investment advice. Cryptocurrency markets are highly volatile and unpredictable. Always conduct your own research.